Hey everybody, welcome to Options with Hans. I'm Hans Albrecht. I was a pro options market maker for 15 years and then an options income fund manager for a decade after that, managing 12 different options income funds, $1 billion in option strategies managed, including downside protect funds. So, those scary things, they're called black swan funds to protect your downside. So, offense and defense, very, very much a part of my toolkit. So, please like and subscribe down below. Hit that bell if you can find it. Grab my free options cash flow blueprint and the other one. The two together are giveaways that don't suck. Sorry to tell you that. You might be used to the ones that suck. You're going to be surprised and get something really, really good here. And also, we have a few spots left for our super bundle for July 4th into our Leaps program, Leaps Core, Leaps AI, Leaps Explosion. We've got some amazing, amazing things going on in there. Again, a couple names we put in there that are already doing well. Hey, it's a bull market. Everybody loves a bull market, but we are really, really picking those great names. So as always, your trade, your risk. This is for education and entertainment purposes only. I hope you are entertained. Are you not entertained, as they said in Gladiator? So we're going to talk about some trades here. We're still monitoring the Soxhole trade. Incredibly, people are like, how can you not sell this position, Hans? Because I still really believe in this trend. Absolutely bonkers potential in these semiconductors. We bought these Jan 26 SOXL calls around 258, and I think they're trading around $8 still. So over 200% on those. Today, though, we're going to talk about another version of those levered funds, right? These are things that I've actually really talked down to in publicly over time. But I've said, listen, there comes a time where these things really start to capture a narrative and they start to act in a very sort of predictable way, right? We can't tell the future, but these things start to act in a way that starts to really get me excited, right? And so what I mean by that is when I saw this was May 26th, and so if I look up the Soxhole, we can see this sort of steady move in here, and it's based on the SOXX. So we have this nice move. So what I was saying was, listen, this is something that is turning the corner here, right? So we have a narrative in place, we have momentum in place, and when you get that, you can see we have all greens on my MTI, which you get in the bundle. So you get this really, really nice indicator. It kept you out, blood red over here. Things start looking really, really good again. You get this many green bars in a row, and there's something good going on. So you see this sort of steady move, and that leads to less of that leverage decay. So that's where I don't mind cycling in to something like an SOXL. And that brings us to today's idea, which is the MSTR double lever, two-time levered version, which is the MSTX. The interesting thing about it is that when you get that sort of consistent momentum, you don't get that chop up, right? That leverage, that sort of daily rebalancing that can hurt the performance of those underlyings. You don't really want to get involved in those when there's a ton of volatility around. I know people think, well, that's when you want to harvest those option premiums. There's a risk in that, right? The SOXL went from 70 to $9. That's a big risk, right? You end up holding the bag on something it's really going to put you through the ringer for a little while. So I'm not going to get into all the reasons, M2, all the reasons that I like Bitcoin, because I did that in the other video. But I want to talk about the actual trades here that look interesting to me. So we've got implied volatility extremely low. So I've been talking about this for a while. We're going to take a look at the options a little bit more in depth in a moment. But we can see that IV percentile at 7, that IV rank at about 12. The blend of those two is basically under 10, which is exceptionally low. So this is not a trade where I get a super excited about income opportunities so much, because you're just not really getting the juice out of that, right? So my whole approach involves looking for the edge, and if I'm not getting edge, I don't do it. I used to tell advisors all the time, even though I'm selling covered calls and other kinds of sort of option overlay strategies, I don't like to do them. And they'd say, well, what are you talking about? What do you mean you don't like to do them? That's your job. I said, no, I want to do them when I'm compelled to do them, when I see edge, when I see a reason to do something. If I don't see it, if I see that it isn't worth me giving up upside for some meager little premium, I'm not going to do it. And that's really how you should look at the world of options, really. It's all about edge. Okay, first things first. So the IBIT, which is basically Bitcoin, the best Bitcoin ETF out there, low cost, very highly liquid, liquid options, so terrific to trade. So we've got this rising term structure, very similar to MSTR. You don't see that in some of the more typical equities out there. So they are charging a little more over time for that explosive potential. But if we look here, look at some shorter term option pricing, it really has come down quite a bit, and for good reason. We've seen realized volatility, which is sort of actual volatility. Realized volatility looks into the past. It tells you, well, okay, this is how something is. This is the risk, right? This is kind of like you're pricing insurance, and you're going, well, what is a 20-year-old's record who has driven a red Mustang been like in the past? Well, okay, this is the risk in that particular driver. So now we can start to price car insurance for that person. Well, the options market does the same thing with stocks. Well, how much has this stock been moving? Well, okay, based on that, we better price the options at a certain level of expected volatility. So we can see that volatility has really, really gotten crushed, which is one of the things I like. I think if we're starting to break out, we kind of everyone's in this sort of lull of having kind of almost forgotten about Bitcoin because it hasn't really reacted very much over the last little while. It's kind of stuck around 100,000. Now we're starting to move again potentially, and we can see the options just starting to dip, just starting to rise just a little bit lately because they're sort of sensing something. They're sensing that impending kind of move that could be potentially coming. So let's take a look at the longer term options. Look at this. Look, they've just gotten cheaper and cheaper and cheaper and cheaper. That's one of the things that gets me a little bit excited about getting into some of these longer term plays, like cheap options. And then another thing is I'm going to show you the skew right here. So let's take a look at the skew. And what the skew does is it basically measures those out of the money puts versus the out of the money calls. So how excited are people, right? At the money volatility kind of gives you a broad idea of where people kind of feel like things should be, right? Where should insurance be priced? The skew is kind of the market's way of saying, well, what if I'm wrong? If I'm wrong, this could happen, right? So it's almost like this secondary sort of measure of how the market feels. And you can see that shorter term, we're seeing the skew kind of kicking up a little, but really there's not a lot of panic there, which I like. When you start to see a lot of panic in the skew, sometimes that can mean that we've had the run, like the run has kind of had its go, and maybe we're sort of starting to top out. We're just kind of getting going here. And if you look at those longer term options, man, that skew is flat. They're just not pricing in what I would consider something very, very exciting, right? So I like that. I like feeling like the market is not reflecting the possibility in this thing. There's no guarantee, but I like when I'm getting a little bit of that extra edge in an idea that I have. So we can see those cheap options here. So you're going to get in Leaps Trader, you're going to get these kinds of things, these kinds of emails. Here's what, we sold out our Robinhood position, 294% on that one. That's unusual, right? That's a pretty nice gain. But then some other positions here, and then Leaps Explosion, we got into some of these 70s here. And then we talk about some MSTR and MSTX as you guys saw in my last video. So kind of exciting. Let's take a look at some of these trades now. Potentially. So if I look at IBIT, we've established that the options aren't that expensive. The upside isn't really priced as though there's going to be some incredibly explosive sort of move. And we're starting to get that little bit of a move here, right? So let's take a look at the chart. We can see this is MSTR here. It's sort of getting going, right? This is what's going to really drive MSTX as a trade, which we put on. That's the trade that I think could be, 5, 6, 7, 10 bagger kind of thing, right? Could be a really good trade if it decides to do what I think it could do. But if we look at IBIT, you've kind of got this nice little sort of pattern here. And this is what I've been watching for a little while. And I'm sure I'm not the only one, but we had this nice little channel that we've now broken out of. Right? I like that. That's what Bitcoin tends to do. It finds a level and then it gets kind of stuck there for a little while, which has been the 100,000 mark, right? We were up here and then we had April and then we've got back there again, right? So this has been very, very sticky. If we can get far away from this, it's going to be nothing but air up there. Right? This is going to be a very interesting opportunity. And if you look at the gamma profile, let me take a look at the gamma profile. I know that gets a little bit deeper into the weeds, but hold on. Here we go. So you can kind of see this is where we're trading right now. Now, if we start to move higher, we have a little positive gamma here, which could be a little bit like walking through mud, right? So that can slow things down a little, but it's not a lot. And then here you have a whole bunch of negative gamma, and negative gamma, without getting too deep into it, just means that there's the potential for market makers to have to cover these positions, which is going to push it even higher, then push the stock higher, right? And so as you get through here, you could have an accelerant to the upside and followed by a little bit more negative gamma here, and really not that much to see, to be honest. If you sort of look at these positions here, there's not a whole lot to talk about to the upside. So there's really nothing sitting in the way from a gamma perspective, which is another positive, right? You see how we're lining up that edge as we look at these different metrics, these different little bits of information that can help us to formulate a more cohesive sort of idea way, and this is how we're going to express it, right? So we're going to go in here, and the one that we did the other day was the June 70, 2026 70 call in the low tens, and also there was an in the money play as well, which is doing very, very well as IBIT goes higher, right? So the way to sort of look at those two trades is if you have extremely strong conviction that something could be very explosive, then that out of the money could be good. If you're a little bit more lukewarm about it, but it's something you believe is going to happen, you're just not quite sure when, then you want to go with that little bit harder delta, right? It's going to be a little bit more expensive, but it's going to give you have the dependability of that higher delta, as opposed to these are called the wings that can sort of collapse a little bit over time. So that's going to give you sort of dependable sort of position to the upside deltas if it pulls back a little bit. So for me, I kind of like this explosive potential right here, right? Because if it completely collapses, then you don't have a lot on the line, right? So now I'm going to show you my Vega bailout trade right now. So the way it works is that I'm going to buy 10 of these 70s, which give me a 55 delta, right? So that's a pretty, kind of middle of the road delta. Not extremely high like we do for many of our trades. It's not extremely low like many of the explosive trades. But what we're going to do is we're going to add a 47 put to it. And this is going to come to us very, very cheap. You know what? In fact, I'm going to change that to maybe like a 49 put, So we're going to pay 435 for this one, and we're going to pay 1045 for this one. And I want to show you how this acts. How this acts is basically, it's a strangle. But it's a strangle that has a very delta positive lean to it, right? This is not a completely neutral strangle, which you might put on if you think options are really cheap and you think a big move is coming, but you really don't know what direction it's going to be. This is going to give you a little bit more of that lean long delta. And the way the bailout works is we're already looking at that chart, right? We show that we're at a breakout point on the chart, but what if it completely fails, right? What if it catastrophically fails? Then there's probably a reasonable chance that we're going to head back into the 50s. And if Bitcoin just, completely gives it up, then, we'll head into the 40s on the IBIT. And so what you see here is on these 10 lots, you're going to give up some P&L down to the low 50s. But what it doesn't recognize is a potential rise in the implied volatility. That's where the Vega bailout comes from, right? So the Vega bailout is going to probably 3 or 4 volatility points to this position. And what that's going to mean is that the Vega portion of your strategy is going to serve to bail out the long delta of your strategy. So I'm looking over here. So notice what happens here. This position from this point on is going to potentially, if it fails, going to lose us about $2,500. But we have not vol shocked it, right? The Vega bailout requires a vol shock. So if I add 4 points to this, right? If they were short-term options, I might add 20 points to it or 15 points to it. But since it's a little bit longer term, I can't get too crazy on that vol. Watch what happens now. I've gone from losing 2,500 to losing about 600 or 700 in this range that I thought it would get in. And if it really collapses, I'm actually going to start making money, believe it or not, making money. And these have a lot of time left on them. So don't think that can't happen. It's possible. But the favored position, what I'm liking is a very, very strong move up here that could potentially on a 10 lot maybe make us, maybe I think a reasonable move probably over time would be about 20 grand, maybe a bit more than that. And if it completely, falters, then we have this Vega that's going to bail us out, because as implied volatility rises, we're going to get a nice big win from that Vega. So that's the Vega bailout, right? So I like to use these when there's sort of a big breakout, or there's the potential for a big breakdown, but you're sort of feeling like it's going to hold. Then you can kind of lean into one direction, and you can use option Greeks to your advantage, right? A bit like the Goldman Sachs that I presented the other day in the video. I said, listen, this is a trade where you can set yourself up so that you're short Vega in the right place, where you think the stock's going to go, right? You need to combine Greeks in order to get the best reaction out of your P&L. And in this case, if you get that catastrophic turnaround, it's not going to cost you much, right? So that's the beauty of it. You can do great to the upside with your positive delta, but if it fails, you get cushioned to a great extent. That is the nice benefit of having that setup. But it only comes when you've got volatility levels, option levels very, very low, right? You need them low so that they have somewhere to move, right? If they're high, they don't necessarily explode, but at this level that these options trade at, there's the potential for that nice Vega benefit. So hopefully you guys enjoyed that. So that's the trade I like right now. You could get in there and buy that 70, which I'm going to do tomorrow. I'm going to buy the 70. I'm going to do some extras, and then I'm going to pick up some 49s, and we're going to put this trade on, and we're going to follow it over the next few months and see how this plays out. Maybe as we see the situation evolve, if we see option pricing move around, there are other things we can do, right? We can hedge ourselves in different ways. But you want to be nimble, you want to be on the ball, and you want to be paying attention to this. And if you want somebody to look at this stuff for you, take a look at our Leaps bundle, which we're only going to have for a few more days. July 4th bundle, unbelievable value, really one of the best programs you're going to see the best, right? The best program that you're going to see anywhere. And we'd love to have you. So take care, everybody. We'll see you in the next video.